Stocks or real estate? At 22, that sounds like a financial question. At 32, it feels very different. Because at 32, you're no longer choosing between two investments. You're choosing between two possible futures. Imagine this. You are 32 years old. You have spent the last decade building your career. You worked hard. You were responsible. You avoided major mistakes. And one evening, after another long day at work, you open your banking app. You've saved money, more than you had in your 20s. And yet suddenly it doesn't feel like enough. Not because you're struggling financially, but because time suddenly feels different. At 22, 10 years felt endless. At 32, 10 years feels frighteningly short. You see friends buying homes. Others proudly talk about their investment portfolios. Some seem far ahead. Others seem completely lost. And a quiet question starts following you more often. Am I running out of time? Because every year you wait feels more expensive than the year before. Hello, I'm Kaya. And today I'm going to show you what happens when a 32-year-old woman stands in front of two financial paths. One path leads to stocks. The other leads to real estate. And before this story ends, you'll discover something surprising. The investment itself doesn't change her future. The person she becomes along the way does. Let's call her Ivy. Ivy is 32 years old. She has a stable job, no debt, some savings, not enough to retire, not enough to never work again, but enough to make a serious financial decision. Like many people her age, she feels pressure. Not from her family, not from social media, not even from her friends. She feels pressure from time itself, because every year she doesn't invest feels like a year she'll never get back. So she starts researching stocks, ETFs, rental properties, real estate markets, interest rates, financial podcasts, YouTube videos, books, experts. And the more information she consumes, the more confused she becomes. One expert says real estate creates millionaires. Another claims index funds outperform almost everything over the long run. One says leverage is the key. Another says leverage is dangerous. Everyone sounds confident. Everyone sounds credible. And yet nobody answers the question Ivy actually cares about. Because she isn't asking, which investment generates the highest return? What she really wants to know is, which decision creates the better life? Let's imagine Ivy chooses stocks. The process feels surprisingly simple. She opens an investment account, invests her savings into broadly diversified index funds, sets up automatic monthly contributions, and then nothing happens. At least nothing visible. No new house, no keys, no tenants, no exciting milestones. Her life looks exactly the same. And this is where many people become uncomfortable. Because when progress remains invisible, doubt becomes loud. Have you ever felt that? You make a responsible decision. You stay disciplined. And 6 months later, your life still looks exactly the same. That feeling destroys more investors than any stock market crash. Because human beings want proof. We want results. We want confirmation. We want evidence that we're moving in the right direction. But wealth building rarely works that way. Now imagine Ivy chooses real estate. Suddenly everything feels different. Property tours, meetings with banks, negotiations, contracts, repairs, decisions, responsibility. For the first time, she feels like she's building something tangible, something she can see, something she can touch, something she can walk through. Psychologically, that's incredibly powerful, but powerful doesn't mean easy. 4 years pass. And now both versions of Ivy face their first major test. The stock investor opens her portfolio during a market decline. Thousands of dollars have disappeared. The news is negative. Fear is everywhere. For the first time, a quiet doubt enters her mind. What if the path she chose isn't leading where she thought it would? The real estate investor faces completely different problems: unexpected repairs, rising expenses, difficult tenants, a leaking roof, a weekend filled with problems instead of relaxation. For the first time, She wonders if she made a mistake too. And this is exactly where most people quit. Not because they chose the wrong investment, but because they mistake discomfort for failure. In Tokyo, there is a lesson hidden within the rhythm of the city. Every morning, millions of people board trains with remarkable consistency. Not because they feel motivated every day, not because every day is exciting, but because they trust the process. And wealth building often works the same way. The winners are rarely the smartest people. Most of the time, they are simply the people who keep going after the excitement disappears. At age 38, something interesting begins to happen. The stock portfolio has grown, not dramatically, but steadily. The market has recovered. Compounding is now quietly working in the background. At the same time, the property has changed as well. The mortgage balance has decreased. The value has increased. The rental income has become more predictable. For the first time, both investments begin producing visible results. And this is where many financial discussions become misleading. Because people love numbers, net worth, returns, property values, portfolio balances. But numbers only tell part of the story. The more important question is, who is Ivy becoming? The stock investor has learned patience. She has learned to ignore headlines, to stay calm during panic, to trust long-term systems. The real estate investor has learned responsibility, negotiation, problem-solving, decision-making, leadership. The investments are shaping her character, not just her wealth. In Osaka, there are family businesses that have survived for generations. Not because every year was successful, but because consistency survived every crisis. The exact same lesson applies to investing. Great wealth rarely comes from genius. It usually comes from staying committed longer than everyone else. At age 45, Ivy notices something surprising. The fear she felt at 32 is gone. Not because she became rich, but because she became confident. She now understands how wealth is truly built. Slowly, quietly, repeatedly. The uncertainty that once bothered her now feels normal. And that transformation is worth more than any investment return. By age 50, both versions of Ivy have built significant wealth. The stock investor owns a large portfolio. The real estate investor owns valuable properties and receives ongoing income. Depending on market conditions, either one may be ahead financially. But by now, that isn't the most interesting part of the story. Because the real winner was never the investment. The real winner was consistency. In Kyoto, an elderly woman sits quietly in a traditional garden. She's been investing for more than 30 years, sometimes in stocks, sometimes in real estate. One day, someone asks her, "Which investment changed your life?" She smiles, looks at the carefully arranged stones in the garden, and gives an unexpected answer. Neither. The visitor looks confused, so she points to the stones. Each one was placed slowly, patiently, over many years. Then she says, "The investment was only the tool. The habit was the real transformation." And maybe that's exactly the lesson you need to hear today, because your future isn't waiting for the perfect investment. Your future is waiting for consistency. The decision you make today is important, because 20 years from now, you probably won't remember every market correction, not every repair bill, not every interest rate. But you will remember the person you became because you refused to quit. And that person is often the most valuable asset you will ever own.